And in terms of margins, can we say that we are looking at around 10%, 11% kind of margins in FY25? Based
Target
on
is slightly higher, but yes, minimum this much.
so 10 to 11% is the minimum, but you are targeting a much higher rate.
Yes.
Okay. And in FY26, can we say we can go to about 13, 14%, or that is too optimistic?
That is too optimistic to comment right now. So once we get into that financial year, we will be able to get to know that what the market situation is like and where we are standing.
Okay. And just one last question. So what are the major risks that we see which may hamper our growth trajectory?
Our business is directly linked to the Indian economy. So if there's a major risk to the Indian economy, it is a risk to us. Apart from that, there is no external risk that we go under. So there's no risk of damage or insurance. I mean, there's no other risk as such. Zero risk.
Okay. Okay. Thank you. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Manav Kothari from Kothari Investments. Please go ahead.
Hello.
Kothari?
Hello. Am I audible?
There's a lot of disturbance on your line.
Hello.
Yes, you're audible.
Yes. Congratulations for a brilliant set. I would like to ask, as you mentioned, there's a 100 crore in-hand order book right now. We don't call it an order book, but 100 crore in-hand order. So can we expect a top line around 300 CR for the FY25? 350 CR?
On a conservative side, 300 crores, yes.
Yeah, on a conservative side. And second question I would like to ask, how do you see the exports opportunity for the next few years?
Can you please come again?
Exports.
We do not have anything immediately in pipeline regarding that, but definitely we will, keep the cards open for that, maybe in the next financial year.
Yeah, right. Because the global container logistics price has been surged a lot, so maybe that may be a opportunity for us to bang on.
See, our hands are full currently, and we are making good amount of, margins and volumes with the business we are doing. So we are not thinking of adding a new vertical or doing export or anything else. So maybe in the next financial year we can look into it as well.
Right. And how do you see as an optimistic, conservative number for a view of 5 years? What do you see the company as?
The view for 5 years, if you ask me,
like around 3 to 5 years, what do you see?
Let's skip this question, please. I mean, I'm not sure if I'm allowed to say it or not on the call.
Okay. Thank you. Thank you for the response.
Yes, thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. Next question is from the line of Nitin Kapoor, an individual investor. Please go ahead.
Hi, sir. Congratulations on a great set of numbers, especially the bottom line part. So I have a few questions regarding the numbers. You've already mentioned that on a conservative side, you're looking at 300 CR revenue for FY25. So what could be the number on the higher side? Let's say if we beat that, what could be the most optimistic number?
Hello, hi Nitin. Thank you. Thank you for the congratulations. We can look at, say, 330, 325, 330 on a higher side.
Okay. Thank you very much. And better margins, you mentioned that it could be more than 11%. So if we do 11%, how much could be the PAT percentage? Because last year it was 5.5%, I think. So could it go to 7% or 6.5%? What could be the number?
See, I would not like to comment on that. It would stay, around between 5 to 7%.
Okay.
Yeah.
Sure. So pretty much similar to what we've done in FY24.
Yes. Or maybe, our goal will obviously be to increase that, but it's very hard for me to comment.
Okay. So basically we are paying 15 CR debt. So I think that should slightly improve the bottom line. Am I right in thinking so?
Absolutely. That creates a, a huge breather for the bottom line. And I'm being very conservative in whatever numbers I'm giving. We would like to surprise the investors as we did last time.
Okay, sure. And just one other question. So you said the debt to equity ratio is currently at 0.9. So how much that would come down in FY25?
I'm not too sure, with these exact projections. So maybe you can
But that would come down, you think?
Yeah. It will come down, but I don't know the exact numbers. So talking about that.
Okay, sir. And just last question, 11% EBITDA you said, so can it be slightly higher, 11.5? Would that be your target or?
The target is sky high. It's coming down to reality.
Okay.
You don't know where it will be coming to. I don't know. I mean, we are targeting good numbers by 11%, 12% is achievable, doable. It depends on the economy, what sort of orders are there, what sort of orders come in. So, if we do good numbers in revenue, obviously our fixed costs remain the same. We have a good ERP system. Our fixed costs will remain stagnant. So that is where, we'll be able to put out a few extra percentages.
So I understand. No, I get your point. You basically want to give conservative guidance, but as you did in H2, you want to surprise the market.
Yeah, that's right.
No, thank you so much. It was really nice talking to you. Thank you, sir.
Likewise.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Next question is from the line of Navratan Jain, an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon.
Very congratulations on the stellar number.
Thank you, boss.
Yeah. I just wanted to know, you had told 300 crore is on conservative side, which we can do on revenue front, and say 10 to 11% of EBITDA margin. And when there is a repayment of debt of say around 15 crores, then there would be how much do you think finance cost should come down to, which is currently at 3.4 crores. So will it go down to half?
If you ask me practically, yes, slightly lesser than half, but the exact number I'm not having. Yes. And
if it goes down to say half, then your PAT margin would improve say from 0.5 to say around 6.5%. If there is no improvement in technology as well, or if there is no improvement in operations as well.
Absolutely.
Right?
Absolutely.
And so we can expect improvement in operations and etc. everything. And then it can be around 7.5%. Can we expect that?
Like I said, I won't be able to comment on that. So if it is there, you'll get a surprise. If it is not there, yeah.
Also, I wanted to know how many fleet do you own? Semi-trailers and how many of them are on finance?
So we do not own any vehicle on finance. Currently, we have just bought the 2 pullers. That is 2 Eicher 8055 models. It is called a puller vehicle, and 18 axles. And in the previous year, we did not have any asset. This year, we do have some assets, and that is it, sir.
Do you also have refrigeration trucks or something like that? Do you serve those?
Refrigerator, you asked, sir?
Yeah, refrigerated trucks or something like that.
No, we do not have any refrigerated trucks, but we have 8 trailers as well. I missed to mention. So these are 8 specialized trailers. These are low-bed vehicles. So apart from what we've added after the IPO proceed, we had 8 specialized vehicles as well in our fleet.
So are those flatbed trailer or coil trailer?
Yeah, these are low-bed trailers. There are it is in a Z shape, so it is just 1 feet above from the ground. It is to accommodate higher dimensions and ODC consignments. So we do have 8 of them.
Mm-hmm.
Yeah.
Okay, sir. Thank you very much. Most of the questions have been asked by previous members, so I have been answered. And very congratulations, sir. Thank you.
Thank you so much. Thank you.
Thank you, sir.
Thank you. Next question is from the line of Prince Chaudhary from Pink Wealth. Please go ahead. Mr. Chaudhary, can you please unmute your line?
On page 12 on your presentation, page 12-13, you have mentioned in your business strategies part that you are going to own vehicles in order to increase the goods transportation network. Can you please comment on that?
Just 1 second. So that is only for ODC and high hydraulic axles that we have. So we would want to do that in the next financial year, where we will be purchasing more axles. So these are specialized movements for fleet rentals only.
Okay. How much means what you have planned? How much you will going to add in the next year?
Probably one or two, that's it. Because, each month we can get 20 lakhs of revenue extra, and it is highly profitable. So to give on rent and to get some, assured incomes and revenue streams, we might add in the next financial year.
Okay.
Yeah, to get an idea about the value, it will be around 4 to 5 crores.
4 to 5 crores
For the fleet.
Okay. That is your cost for the fleet.
Yeah, that is the cost. That is the cost of the fleet, yes.
Okay. Yeah. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone. Next question is from the line of Vivek Chadha, from an individual investor. Please go ahead.
I'm audible?
Yes.
Yeah. So first of all, congratulations for posting good set of numbers.
I'm sorry, sir. Can you use
Sir, I
your
have two
handset
questions.
mode? Your audio is not very clear.
Is it better now?
Yes.
Yeah. So first of all, sir, congratulations for posting up a good set of numbers. So
Thank
I have two questions. Basically, first question would be on the renewables. As you mentioned, there is a push from the government side on the renewables. And I was reading your RHP and the presentations also. So we have mentioned, we were delivering the heavy transformers, we were delivering boilers and all those things. So even in the power sector also, you guys have mentioned a few things. So just wanted to know, what kind of opportunities are we looking at there, at the power sector and at the renewable sector. So are we specifically targeting that sector? What kind of, vision we have it there? And sir, second question would be on application specific. So as you know, like there are certain trucks which having feature of temperature control, and there are trucks which are used for specific applications, right? So as in Premier Roadline, do we have any plans to add on those fleets or those trucks which are application specific? So basically, I'm just asking about the control tailors, temperature control tailors, so which are used for specific applications, right?
Understood. So I'll answer your question one by one. Regarding the first question, which is renewable energy, definitely it is under our radar of serving extensive customers and, marquee clients in that particular sector. We are doing our best to cater to all their needs. Currently also, we are doing good volumes. In the future, we want to expand, be it transformers, be it any equipment related to any renewable energy sector. So that answers your first question. Second question that you asked is about the temperature controlled vehicles. So temperature controlled vehicles, we do not own any, and we do not intend to own any temperature controlled vehicles. Regarding specialized and specific use case vehicles, we are already owning hydraulic axles and pullers for specific use case. That is why also in the investor presentation we have mentioned that we will increase our fleet size of these special assets in the future if we get any opportunity to get in fixed and I would say assured monthly revenue.
Okay, understood. Fair enough. If you allow me, I would like to ask one more question here.
Mm-hmm. Yes, please.
So, I was going through certain videos, so I get to know, you guys also do the cross-border transportation, right? So we were transporting few things to Nepal and all Asian countries. So yes. I would like to know if there are, plans to expand on that, and if we have, order book around 100 crores, as you mentioned. So if you can just give a brief idea about it, what kind of, segmentation wise, if you can just give an idea. What kind of revenue is there for the cross country and
Understood. So like talking about last year revenue, I don't have the exact number, but because of their orders are not that much if you compare to the pan-India network and everything. So talking about Nepal, we want to concentrate where is an order. So currently we are concentrating only in high volume industries and high volume customers where we are having daily dispatches of say multiple trucks and multiple vehicles. So if there's any opportunity for Nepal, Bangladesh, we have the specified resources, we have the capability, we have the manpower, we have all the resources to do that transportation for Nepal, Bangladesh, and Bhutan also.
Understood. Fair enough, sir. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Sai Soumya from PwC. Please go ahead.
Hi. Am I audible?
Yes, you are.
Firstly, heartily congratulations on the wonderful set of numbers.
Thank you so much. Thank you.
So my first question is regarding the debt out days. So, the trade receivable days. So is there any possibility of reduction in the next year, FY25?
Yes, we have seen a decline in the debtor days if you compare, and we are focusing and working hard to further reduce it. So we are focusing on sectors and customers where it is even lower than what it is currently. So, yeah.
Okay. And second question is regarding the revenue. So you said that on a conservative part, we can expect 300 crores of revenue in FY25. So can I ask this, how much of the revenue can we attribute to the H1 and H2?
65, 35. 65 will be H2, 35 will be H1.
Okay. And can we expect any quarterly guidance? Because it will be difficult for retail investors like me to wait for the half-yearly result. So
Yes.
Can we expect a quarterly investor meetups going forward?
We are in talks and we are definitely planning the same.
Okay, sure. Thank you. That's it from me. Thank you.
Thank you so much. Thank you.
Thank you. Participants who wish to ask a question may please press star and one on their phone. Next question is from the line of Heath Vora from Guardian Capital Partners. Please go ahead.
Yeah, hello. Good afternoon. So I had one question on debtor days. So when we compare your debtor days versus certain other logistics players, this number comes much higher. So what is the reason for the difference between our days being much higher than maybe other logistics players?
See, we are working for project companies and we are doing project logistics. So the transit time is also high, and also the companies that we are serving for are project based. Maybe if you compare other listed entities, their debtor days can be lower because we are working for FMCG or other sectors. So what our debtor days is, as per our knowledge and as per our research, we are at par with industry norms.
And how do you plan to maybe improve? Is there a possibility where they pay you on a percentage completion basis if you want to sort of, lower this down?
Like I mentioned, we want to work for customers who take lesser time to, pay, and there's a lesser debtor days and lesser aging. And on the other side, we do have options of bill discounting available. So there are multiple options. We are working as a management to further reduce it, and you will see a change in future. Some improvement in the future.
Understood. That was my question. Thank you so much.
Thank you.
Thank you. We have a question from the line of Prince Chaudhary from Pink Wealth. Please go ahead.
Hello?
Yes, please go ahead.
Can you provide an update on the current state of your fleet management? How you're optimizing your fleet utilization?
See, we own next to zero fleet if you compare to our operations. We are moving close to 19,500 vehicles in a year, and we have started owning vehicles right now after IPO. So we are not managing our own fleet as such, but talking about the market fleet that we are utilizing, we have a complete ERP system. It is having each and every metric and each and every detail of the vehicle that is on the road. So at any given point, there are close to 500 to 600 vehicles on the road with Premier Roadlines Ltd goods.
Okay. And steps you take to improve your route planning, also to reduce the transit time. How you organize that?
That is all decided by maybe the GPS and the traffic manager. So we do have managers who are dedicated and deployed for a certain sector or a certain geographical area. So they keep and check all these metrics.
Okay. And also the fluctuating fuel prices, how do you do that? Do you hedge any hedging sort of tools you use?
If first of all, if there's a contract that we are into, if there's an increase in fuel price, the customer pays the additional fuel price. So we do have a clause in the contract that we have with the customer. But because we've seen in the past a few months and years that, it's been stagnant and it's not been moving up and down. So it's not something that we have to worry about. And going forward also, we are discounting that and keeping that in mind.
Okay. So customer pays for all the fuel prices.
No, if it is increased, for example, if I have fixed, a price of 100 rupees, and if the diesel price increases by 1 rupee, and then the difference cost has to be paid by the customer in the contract. There's already terms and conditions as to what percentage of increase the customer has to pay.
Okay, so any increase in prices, then customer will pay. Okay.
Yes.
Okay, and can you please tell about the revenue recognition for the contract segment? How do you recognize the revenue?
I've already mentioned in the earlier half of the call that we do not have a metric at the moment to recognize it very correctly to the last decimal. We are about to develop something that will be able to give us exact numbers because, some of the times it is overlapping. So once we have that number and exact metrics in place, we will definitely post it on the exchange.
No, not for the breakup. Suppose you have a contract for 2 years. So what method do you use to recognize that? Whether is it completion method or,
Okay. So ऐसा नहीं है, it is not a contract that, that it is, you have to complete this contract and then only you will get the payment or something like that. It is an ongoing contract. For example, if a consignment has to leave from a factory in Delhi and it has to go to Bombay, so one material can go today, the other material can go the next month. So whenever the material will be ready to dispatched, we will be able to place the vehicle and we will be the only provider engaged in that transportation. So there's a fixed lane kind of a contract. It is not a contract to complete something or to do something like that. You understand what I'm trying to say?
Yeah, got it. And the last question, how do you differentiate your services from your competitors?
First of all, we are quite professional. Second, we have the experience, we have the reliability. My father has been in this trade for decades. He has a name, he has the required manpower. We have the most professional team is what we consider, if you compare with the competitors, these few factors is what we differentiate at.
Okay. Yeah. Thank you. That's it from my side.
Thank you. We'll take our next question from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
Would we be entering or
Chaudhary, your audio is not very clear. Can you use your handset mode, please?
Yeah. Is it clear now?
You can go ahead. Yeah.
So I wanted to check that, for our revenue sort of CAGR run rate to continue, we will probably also need to have certain long-term arrangements with our customers as that they keep giving us business, So anything that is happening along?
We've lost the connection of Mr. Chaudhary. We'll move on to the next question from the line of Vivek Chadha, an individual investor. Please go ahead.
Am I audible?
Yes, you're audible.
Yes. So as you mentioned, we have order book of 100 crore, right? So down the line, how do you see that growing it? So can we expect, by end of this FY24, right? So we can have the order book of around 300 or 200 crores.
See, like I mentioned in the past also and early in the call, these order books are not some completion sort of orders that you see typically in an infrastructure company or some other sort of company. It is a contract that we have with the customer that we engage with, that if there is any requirement of transportation from point A to point B, our services will be engaged. We do have currently approximately 100 crores of order book in that sense. And we do not see any chance of increase in that particular number for this year.
Okay. So no, my actually question was actually this will be keep growing, right? So as you move on.
Yes, obviously, because we are not dependent on the contract. You understand? We are not dependent solely on the contract. This is just a contracted logistics service that we are giving. So we have 100 crores in hand till now, and going forward is the same what we're expecting. Next year, obviously, once we enter the next financial year, it will definitely see a growth.
Okay, understood. Okay, thank you.
Thank you. Next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
I have two more questions to answer. The first one is, around 2 months back, I came across the news where NHA has increased the toll rates, I guess. So will that have any impact on our margins?
No, it does not have any impact on our margins, because if the costing increase, our rate will also increase to the customer. So if our costing is increased by the toll prices, the rising toll prices, the customer has to pay for it.
Understood. And other thing I wanted to understand is, I heard you're getting into the business of fleet rental.
Correct.
So, how many trucks have you bought, and just yeah?
So we have got 2 pullers and 18 axles. So these are specialized vehicles is what we bought after the IPO proceeds, and we want to give them on equipment rental where they will be using for fixed, needs. So this is the current situation.
So 2 pullers and 18 axles you have bought, and for
yes.
And how much is the cost for those?
Across approximately 4 to 5 crores.
4 to 5 crores in total.
Yeah, in total for these vehicles.
All right. And how much would be the payback period for this?
I cannot hear you. Payback period?
Yeah.
Payback, I mean, the return capital, like when I can get the capital back, is what you're asking?
Yeah.
Around 2 years.
2 years, okay. And do we have any plans to increase the number of vehicles?
No, we do not have any plans to buy any more vehicles like normal vehicles, but definitely if we have any opportunity of an equipment rental, we will buy only for that specific use, because we want to stay in a very asset-right model. We do not want to be in an asset-heavy model where we want to purchase 100 trucks, 200 trucks. We don't want to do that.
And for this 4 to 5 crore investment you have done, do we have orders in place for these vehicles?
Yes, we do have orders in place for that vehicle. They're already engaged. They're already on the road.
All right. Okay, sir. Thank you. All the best.
Thank you. We have a next question from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
So my line had got disconnected earlier. So I wanted to ask whether we are having the sort of long-term contract with our customers to be able to attain, the revenue CAGR that we are targeting, or what are the things that are happening in that direction?
See, long term, if we want to achieve growth in terms of our top line and bottom line, we do have good relations, good service background, good service history with our customers. That definitely helps in, increasing our market share with those particular customers that we want to serve, those market clients. And the longest contract that we probably can have is of 2 years, because of the nature of service. These companies do not engage in more longer contracts.
Okay. And could FY26, FY25, they are seeing almost 50%, roughly 50% growth or thereabouts. Could FY26 be upwards of 25-30% growth over FY25?
Yes, that's the plan.
So 25-30% FY26 is reasonably achievable.
Achievable.
Okay. Thank you, sir.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Virender Gupta for closing comments. Over to you, sir.
Thank you all for sparing your valuable time for us. And he was my son, Samin Gupta, and he's done his MBA in Logistics and Supply Chain and Finance. And we both are working rigorously, very hard, and we intend to achieve our target turnovers, what we have stated. And we can only thank you all for the meeting. Thank you.
Thank you, sir. On behalf of Premier Roadlines Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.